Alrighty, folks, we are at the airport here, but I still want to record the daily financial news. I've got my 2 pages of notes here for you, so let's just get into it. No particular order. First and foremost, CPI yesterday obviously came in light, as expected. We got PPI this morning. Producer Price Index also came in light. Forecast was for 0.2, came in at 0.1. The core PPI, which is something we should all be tracking, was expected to be 2.6. Came in at 2.4. So another sign that inflation is finally getting behind us. Thursday is also jobless claims day. That came in a little better than expected, 237 versus an expectation of 250. Lots of other stuff going on. We are starting to see earnings roll in. First and foremost, we got Delta. Yes, Delta Airlines reported record quarterly profits and hiked their full year guidance. Not to be outdone, PepsiCo also beat top line, beat bottom line, and raised their outlook. So again, the economy and consumers are spending. It just does seem like it is a travel season. People are getting out on the road, and I can tell you at 5 in the morning, the airport is packed. This reminds me of my old travel days. Other things going on, it looks like we have Jamie Dimon and Jeremy Siegel putting out some stuff that is worth reading. Jamie Dimon is saying that he expects the consumers to be out of their excess cash by the end of the year. And Jeremy Siegel is saying consumers are out YOLOing, or you only live once, this summer with the summer travel season. U.S. banks are now working with their commercial loan holders increasingly to tweak their commercial loans to avoid defaults. This is exactly what we talked about 6 or 9 months ago. It's often called extend and pretend. That is going on. Other things that I've read in the last 24 hours, we have Goldman Sachs talking about existing home sales. Again, when someone says existing home sales, remember that is transactions. Transactions will not return to 2019 numbers until 2027. This is something you and I have talked about for more than a year, that transactions are going to be down for quite some time. Again, folks, if you haven't downloaded my free 53-year spreadsheet, go to my website, One Rental at a Time. That spreadsheet is exactly what allowed me to call this early. Goldman Sachs is, a year behind this channel? So go to the site, it's free, just need your email so it can mail you the file, and you can see exactly why. And what I would tell you to do if you look at that file today is look at 1981, right at the top there, to talk about transactions for existing and new homes, and then ask yourself, how soon did we get back to 1981? My memory is 12 years. 12 years, right? And that is, of course, important because it was the last time we had an interest rate cycle increase. Other things going on. Reuters has picked up the article about commercial banks working with their lenders, aka extend and pretend. It does look like yesterday's low CPI reading has not impacted the Fed's rate decision for July increase. Most people are still calling for that, well over 92%. But what it has done is it's taken a second rate hike off the table. Older readings were over 50%. As of yesterday evening, it was now 26%. So again, this could be the final one. I am still hopeful that they do not raise it, as I think it will break something. I will point out that we need to watch CPI because we just had the largest base effect roll off. But the base effect for July, which we will get next reading, is actually 0. And August is 0.2. So while we just rolled off a 1.3, the next one is 0, followed by a 0.2. So again, the hard work is ahead of us. Remember, we've talked about inflation being goods, shelter, and services. Shelter will start rolling over in August, as we've talked about the last 6 months, but we still have work to go from 3 to 2%. Got some great Las Vegas real estate numbers from the one and only Brian Lebo. Indicated that last month they only sold 2,009 homes. To put that in context, August 2020, which essentially real estate was shut down, you couldn't show homes, they sold 2,200 homes. So last month was a very poor performance for transactions. Median home price went up. Again, think about that. Transactions are down 20%, but median price went up. In addition to that, inventory is still falling. The one thing that was interesting in Brian's video is he talked about the ultra luxury, which he pegs at 1.5 million and above for the Vegas market. He's seeing some firming in that area. It looks like the exodus from California is not over, and more people are buying those homes. For last thing to point out about ultra luxury, in 2014, they sold 24 homes over 3 million, and in 2023, so far, right, 6 months, they've sold 124 homes. So again, lots of stuff going on. I wanted to record this very quick session because I didn't want to miss this. Last thing I do want to talk about is something from Grant Cardone and Ryan Pineda. Grant Cardone put out a quick short, or at least I saw it yesterday. I actually don't know when it went out, but basically about getting your money right. And he challenged you to understand your monthly spend. So he talked about looking at all of your, spending, credit cards, all of that the last 90 days, dividing that by 3, and that is your monthly nut. Folks, this is straight out of the, one rental at a time playbook. You got to know what you're spending so you know what you need to make. You also need to understand your disposable income. And then Ryan Pineda put out a video the other day challenging you, if you're under 30, to try to live on 50% so you can invest and grow from there. So again, folks, a lot of stuff going on. This is a little bit short video. We are at the airport doing a quick day trip. We will be back shortly, but I wanted to make sure we keep the daily financial news rolling. Thursday, July 17th. Like, subscribe, comment. Hope you appreciate doing this a little bit different this morning. Take care.